Hello everybody, welcome to your Monday edition of the TraderMerlin Show. A short week. We will have shows, let's see, this week we're going to do Monday, Tuesday, Wednesday, and then take Thursday, Friday off. And I think next week I have one show because I'll be out of town. So it's going to be, you have to deal without me for the holiday season. Anyway, glad to have you guys all with us. Good to see you, Siraj, Tom, Mario, Terry, Katut, Thomasina, David, and thank you for the email, David. I'll add Abra onto our list for the CIL. Boss Poopa, Tony as well. I love the new song, by the way. And Giselle. Welcome, everybody. All right, so we did a thing. I think I did one. I don't know. I'm losing track of how many shows we do. I think I'm up to like 230 shows for 2021 already. Who knows, maybe even more. Hello, Owen. I did a session a little while ago saying, are we going to get a Santa Claus rally this year? And of course, we talked about that on Friday's show because of a listener question asking, what exactly is the Santa Claus rally? And of course, we could define it as any period of time. I think the average consensus is the Santa Claus rally is just simply when the markets rally near Christmas time. Well, Trader's Almanac has a much more specific view of that. And it's, again, the last 5 trading days of the year, plus the first 2 in January. So if we look at a map or a calendar, really, if you look at when it starts, right, you have, 1, 2, 3, 4. I think it's going to be Thursday, the 23rd, will be the start of the last 5 days. So we'll do a little poll here and see what happens starting on from the 24th on with regards to market action and that Santa Claus rally. But I decided to have a little bit of fun here and put this little image together that says Santa is no match for Omicron, or however the heck you want to pronounce this thing. And we'll take a look at the markets right now just to get started. Crude oil at the bottom of the barrel here, no pun intended. We had drawn that little yellow box on there yesterday or Friday session, and it's already eroded that one. So let's get rid of that. See, the bigger the box, the better. But I'm dumb. As far as trading direction, you have actually a great hammer formation today. So for anybody who's looking for long action tomorrow, this pattern is setting up as a nice potential bull move. But again, you have to wait for confirmation. So I think the easiest thing to do if you're trading this crude oil price chart right now is wait for it to get above today's high, which would be right around $70. So whether you're a long-term or short-term trader, it's about having kind of rules in place. And as you guys know, my rule is if I have a hammer formation like we see on crude oil right now, if it opens up anywhere down here, and of course it will because this is a futures product and a 24-hour basis, so it'll be a little bit easier to trade it. But it's going to open up down here, and when it does, or if it does break above that 70 mark, then that might be a nice opportunity for a long side playing that momentum on that upside movement. All right, so that was your worst performer, down 2.28%. Indexes, even though they did bounce back quite a bit. The Russell 2000 was down 1.4% at the end of the day, but notice where it hit, right? To me, that bottom of this yellow box is still intact. I sold some puts today on IWM. I sold quite a few of them. And basically, you guys love this. There was so much fear out there in the marketplace today. Again, I was reallocating some positions in the portfolio that I told you that I am striving for 1% rate of return per month or higher, right? And hello, Gilbert. Thank you very much. And David, good to see you. Rob as well. And Margaret, good to see you. And Pepe. All right, we got the band back together. So I sold, and let me just go to IWM here just so you guys can see the price chart. I sold today, and keep in mind where we were, right? So I had the 209s previous month for the month of December. Luckily, those expired out of the money and worthless. I just sold the 188s. So that's all the way down, actually 187s, because I looked at both prices and I was going to be a little more conservative. 187, and notice how far away that is from current price. And let me get some of these lines off here for you because it might be a little bit confusing. That 187 horizontal line, if you look at how far away that is, and just gives you an idea of what people are thinking and how they're panicking. And let's see, that is a drop of roughly, when I did it was about 11.5%. Yeah, 11.68%. Where will you exit the IWM puts? I'm not going to exit the IWM puts because I'm going to let them expire worthless. My thinking is, hey, Lisa, hey, you found the channel. Good to see you, Lisa. If you look at this one on IWM, do I think that the Russell could get down, drop another 12% from here? Absolutely. I totally think it can. Do I think it's going to happen at the end of January? I don't think so. But again, I'm going to make 1% to be wrong. And if it gets all the way down there, fine. I'm okay actually owning it. It's not at a great level. You can see there's kind of a little tiny area of demand, but not that critical. I would be looking to, if I did get executed between now and the 22nd of January, which is when those when these expire, if I was executed and those shares were put to me, I would just be selling covered calls against it to generate some income stream. But to get 1% rate of return, basically betting that something's not going to drop more than 11% in 1 month, that's a pretty good rate of return. That's actually not too bad. And I know a lot of you are going 1% is not enough. I actually did get over 1%. It was like 1.2% rate of return, which isn't huge. But that account that I'm doing these covered cash secured puts is designed to be kind of a relatively low risk portfolio where we're not exposing too much capital and I guess too much volatility and risk. So that was one trade I made today. I told you I wasn't going to be trading these last 2 weeks, but it was down so much today, and fortunately for me, I ended up selling those puts down near the bottom. It was about 9:15 this morning, which is right about here. So already, feeling comfortable. But I guess the question is, are we going to see more market sell-off? And we'll talk about that here in a minute once I get through these top 7. All right, so that was the Russell 2000 now 1.4. The Dow also took a bit of a hit today, although it's really only 2 days worth of a hit. But nonetheless, it was down about 1% today, down to 34,908 as we speak. S&P 500 also taking a bit of a dive, but remember, we've still got this yellow box in play. 4,500 is still that line in the sand, at least for a short-term move. Right now, today we hit a low on that of 14,520. So we're 20 points off of that line where I would start to get out of long positions and potentially start building more short positions. But we'll have to wait and see on the S&P. In my opinion, which is not universal, is that the S&P is the dog that wags the tail, meaning it's the one that's in charge. Now, we'll keep going up this list. Surprised to see gold and silver both dive a little bit today. Gold is down 0.76%, but technically there's nothing noteworthy here, right? It's just kind of real choppy, erratic, so I don't see any strong direction in gold, although my bias is still to the upside. NASDAQ as well, taking a little bit of a dive today. It was definitely much better than the other indexes. You had 0.73%, and so Tom says, why sell a cash covered put instead of a spread? Because I'm not well versed on spreads. Spreads are not my thing, so I just haven't done it. I know I could probably get a greater rate of return, which I may do down the road, but I have so many things in my plate right now going into spreads and condors and all that stuff. It's a little bit beyond me. So just being honest, I know I could do better, Tom. I definitely know I could do better with spreads, and it's something I'm working with Larry on. And by the way, Larry will be on the program on Wednesday, next Wednesday, the 28th? Let me get the exact date. I think it's the 28th or 29th. The 29th, Larry will be on the show, and if I can get Don on the program, I'll get Don on tomorrow, but I really only have a couple days left to get him on the program. So, but that's the reason. It's silver for you? All right, well, I like silver as well. We'll look at silver here in just a sec, because I am still long silver, and I will continue to hold. Now, I have this this lower line here, which that was the 15,000, call it 400 for the NASDAQ, and I put that target, said I think we'll get there by Christmas. Well, I'm going to be pretty dang close. We almost got there today. We're just a few points above the line, but I really don't think that you'll see in the next 2 days it tank all the way down there, but hopefully it does. That means I'll get a little bit, another opportunity to sell some more puts. So that's the main reason is, Tom, is I'm not well versed on spreads, don't feel comfortable with them, so I just do cash covered puts. Easy peasy, and it's a kind of a relatively low risk trade as long as you analyze each individual setup. So I went through the whole list today. The other one that we lost the chart. You did? Well, there it is. The other one I did today actually was I actually sold some puts on XLE, and there's another one. I got I was so crazy. I don't have the numbers here in front of me. I think I got the 47s. I can tell you because it was like 9% down. And it was somewhere in here, which would have put me, maybe even lower, 44. So I'll have to go log into the account and check. But that was another one that I collected some premium on to the tune about 1.5% for January 22nd puts. But look how far away it is. When you look at these levels down here, so somewhere on the 44 to 46 mark, you look way down here, that's fine for a pullback. I don't see that being unattainable. It seems like it could definitely do it. It would take a lot of fear in the marketplace, but it would be coming into some strong demand zones. So it's an area I'm happy to buy anyway, and I collected at 1.5%, so there we go. Easy for me. I couldn't... Yeah, you know what, Tom? It's one of those things. I have so many things on my list that I want to do. It's just life's bucket list, I guess. And options, I've always, for some reason, I've struggled with the difficulty of adding everything together, which is why I love having the options guys on the program, because every time I start to learn more and more about the process, especially the selling side, is what fascinates me. You look at some of the richest people in the world. What are they? Are they buying options? No, they're selling options, right? You look at Warren Buffett. He made $6 billion in a year selling options on positions he had. He's got all these positions, sell a bunch of options on them. So that's one thing I've tried to incorporate in my trading strategy over the past couple of years. And the selling side, especially that 1% strategy, has done remarkably well. And I know you're looking at it going, well, you know, you could just hold the market and get 20% rate of return if the market goes up. Okay, that's absolutely true. But if you look at a market like right now where everything is starting to roll over and sell off, people are going to be losing, 6 or 7% in a month, and I'll gain 1% per month if I position myself correctly and get far enough outside of the strike prices. So it's been fun. I'd rather just sell puts. Me too, Margaret. Days to expiration. With regards to the puts, I'm looking at 30 days or less, so I'm right at that. So I'm going to January 22nd, and of course today is the 20th, so I guess we're going 32 days. I let that slide, and I did calculate that into my rate of return. That extra 2 days, I got to prorate it. But yes, anytime I'm selling, I'll do 30 days or less. If I'm buying directional, I would like to go 90 or more, preferably 120. But you start to pay a little bit more for that time. NJ says long mRNA. Well, I can't touch it, right? Because it is a drug company, but we'll go to Moderna. From a technical perspective, what's it really done lately? I don't know if I would say to go long, right? It doesn't feel like it has any real direction here, okay? If you look at the price of Moderna, and again, this is not the way you would draw a trend line. I'm just kind of eyeballing it. And you go through these bottoms, it's compressing and it's almost in the center of it. So honestly, I would just leave Moderna alone. Whether you love the vaccine, you think they're going to make a ton of money or whatever, it doesn't look like it just has a clear sense of direction, right? I'd love to have something that has a much clearer direction to it to make a trade on. Right now, Moderna really doesn't look like it's doing anything but chopping and compressing. You get the vast complexity of crypto, a spread. I guess it just makes sense to me. Like, I understand the whole decentralized market piece, but yeah, you're right. I do understand the complexity of crypto, so it shouldn't be a problem. And don't get me wrong, Tom, I have done them. I've done some spreads in the past. I've actually had some ridiculously huge winners because I made mistakes, and that kind of frustrated me, so I just stopped. But I'll get back into it. Maybe I should force myself by saying in January we'll have a segment called, the spread of the month. No, it's not an X-rated magazine. It'll be a spread trade in options. Let's see if I can do that one. All right. And then lastly, we talked about silver. So I had SLV in my portfolio. As you guys know, I was executed on some puts at 21, so I'm underwater right now. And again, I thought we'd see a bigger pop today. With that much fear, let's go to that inflation and market crash fear. Let's get to precious metals, but didn't quite see it. Of course, that may have something to do with a little bit of a pullback in the dollar here. But, as that dollar breaks through this 97 mark, which I think it will do, it feels like it's just consolidating at these levels between 96 and 97. I think if that happens, then I think we'll get a much bigger pop to the upside, and then the markets will really start to take a dive. This is a nice shirt. This is a flannel. I'm going warm and cozy over here, Lisa. Moderna's not going to have its next major move until the cancer and other disease drugs come online. Yeah, I mean, look, regardless of your stance on pro-vaccination or non-vaccination, I read something really funny. The only thing that a non-vaxxer and a vaccinated person can agree on is that both of them will never be fully vaccinated. And I thought that was kind of funny because pretty much everything is like, oh, you're going to need another booster, right? You got the Pfizer guy going, oh, you better get your 4th booster, get your 5th shot, 8th shot, 10th shot. It'll never end. You're just going to keep on going. You ever trade futures time spreads? I do not. Nope. Not for me, OG, but I do have a couple guests that have been on the program that are into butterflies, time spreads, and things. They're much more entrenched in the futures market. Again, I'm just directional with regards to futures. No real spreads or complex strategies for me. But OG, I'll let you know. I'll try to, now that I have that in my mind, I'll see if I can get some on and I can talk about those different strategies. All right, so where were we? I want to go real quick into what happened, and then I'm actually going to put a Twitter poll up to see what you guys think, if we are going to in fact have that Santa Claus rally or not. This is what happened out there today, and I was kind of surprised. Not really that Carnival took a huge earnings miss, because who's getting on cruise ships right now, especially if we go into another lockdown, that's going to be even worse for them. Now, I noticed that my slide is cut off here, so how about if I move this over for you guys to, not to there. There we go. That's better. Now you guys can see a little bit better. Carnival, they missed earnings. They were supposed to have lose $1.45 per share. They lost $1.72, and that's a huge miss of 18%. But they were still up on the day, which I actually thought was kind of comical. You know, you talk about a sinking ship. This is a beautiful picture of a downtrend. Now, of course, we could zoom out and see the big spike where it was up back in the 50s. It certainly has been trending up since those bottoms in 2020. But right now, you've got over the past 6 months, 8 months, a fairly weak downtrend, and you know it doesn't look great for me for Carnival. So no surprise that the earnings for today were so bad. I was just surprised to see them move up. Now you also had Nike on there, NKE, which I actually was really surprised to see that Nike jumped into the crypto world. They are jumping into the metaverse and buying digital clothing companies, which I thought was very interesting. Now, here is a chart of Nike. You can see today the price change. It says it was up 2.45%. That's what you're looking here is it was actually down 2.71, but in the after hours it's jumped up. So right now it's at 162.30. So their beat on earnings, which is a 31% beat on earnings, helped them a little bit in the session today, at least turn things around as market closed. Now, the last one here is going to be Micron Technologies. You got a lot of big old chip makers and technology companies are really starting to face like a little bit of a crunch. Well, here is your chart of Micron. Right now, they're down just actually, they're not. They must have just reported even better because they were slight beat, and all of a sudden, we're at 87.25. Last time I checked, we were down here right around $82, and it was like a non-event. Right now, in the after hours, they must have just reported and popped into upset. Let me see if I can get a 5-minute on this one, if they actually show me the after hours trading. Yeah, they don't. Unfortunately, they won't let me see the after hours trading on TradingView. At least, no, I don't know how to do it. I'm sure one of you guys will figure it out and tell me how to do it. Okay, so that's our main stuff. Yeah, Santa Claus rally canceled? Think so? You know what? I think it's about time it is. You know, it's been this market staple where people go, oh, markets always rally end of year. Maybe it doesn't this time, right? Let's see a little bit more of a sell-off. I'm all on board. Let's sell it off. All right, so to go to the title slide, I put there that Santa Claus is no match for Omicron. Of course, if you're in the spiritual world, Santa Claus can beat everybody, right? I'm sure he's got a special reindeer to take down Omicron. Bottom line, though, is it's going to put a damper on things. I'm actually going to be headed up north, Northern California, and I was told that one of the restaurants we're going to go to is requiring to have a vaccination or a proof of vaccination just to enter the restaurant. I was like, oh, come on, this is getting a little out of hand. But hey, got to be careful, and I think what that will do is that will start to hurt retail businesses if you put those kind of restrictions like we saw back in 2020. And if that does happen, what does that mean for our long-term perspective? If we do go to another closure, and it is getting to winter time when the cold and flu season starts to really spike, does that bring things down even more and we go back in a shutdown? Now, does that ultimately mean we start to have a market that look like, let me go back to your S&P, have a market that looks like that? I don't think so. You never know. I doubt it will pull back that much, but does it mean we could be poised for a good pullback? Yeah, I think so. And here's the challenge. If we do have a pullback, and again, I've measured out 20% off that all-time high, which is right here, right around 3,800 on the S&P. If we do start to see those markets sell off because of lockdowns, what is the government going to do? Again, we talk about inflation on the rise. If the Fed's going to try to bail it out and go, we're going to do more stimulus, we're going to start the bond purchases again, or the government says, hey, we're going to do unemployment benefits and put an extra perk out there, $500 per week, so you guys can, help yourselves. That's going to put more pressure on inflation if you just dig deeper and deeper into the hole. So, to me, it's like I do feel somewhat pessimistic for the end of the year, but again, I'm still not shorting the market. I told you I can't do that. Maybe in the last week I will look at buying some straight up put options for the market overall. But I'd kind of want to wait for the market to rally a little bit, and maybe the 1 day a week where they say, oh, Omicron fears have subsided, and all of a sudden markets rally. Then I'll be looking to buy some put options because the puts got really expensive over the past couple days. For those of you who are sellers, it's been pretty damn good, hasn't it? Let's see. NJ says Bobby Biden wants a Christmas rally. Every politician wants, actually, I don't know, this is going to be overly political, but it's like, you know, you look at the way that it always is polarized, right? So if a Democrat's president, it's like the Republicans want the market to do poorly so they can go, see, that president's bad. And if it's a Republican president, the Democrats want the market to do poorly so they go, see, that president did bad. So I'm sure you have both sides are pulling one way or the other, but let's be honest, everybody wants a nice Santa Claus rally, so you all want to have a little extra money in your stockings as we roll out. It was just one of my favorite pizza spots, and they had a sign saying that in order to sit in the bar, you must show proof of vaccination. Yeah, I mean, that's what we're getting. That's what we're getting. And we won't make this a show about vaccinations because we all have our opinions, and I'm not going to die on that sword. Let's see what else we have. Okay, Margaret says markets are pricing in a partial shutdown. I don't think they've priced it in yet. If you look at the price, look what's happened to the market. You tell me that priced in a shutdown? I don't think it has. I think we're going to drop a bit more, and that will be pricing it in, because if this thing just goes sideways like this, that's, you know, this is nothing. I mean, our current pullback off of the peak for the S&P 500 to where we closed at today is a mere 3.7%. Big deal. That's called Monday in Bitcoin. I mean, that's nothing. If we get down to this lower part of the yellow box, which is, you know, 5%, all right, that's a pullback, but I wouldn't call that pricing in. Personally, I wouldn't call that pricing in a partial shutdown. You know, you start to get down to your 10%, like this level here, which is right around 42.50. To me, now you're starting to price it in a little bit. I think a real pricing in of a shutdown would be dropping 20%, which would bring us all the way down here to, you know, our level we defined earlier at 3,800. If that happens, you know, there'll be some nice profits, and maybe some of my puts I sold will be exercised. Let's see what else. Okay, Aunt Nancy wants it to rally. Yeah, because Nancy's not short. Well, you know, I think most politicians, we can say Democrat and Republican, are holding positions long in this market. So what should be interesting is, I think one of you, I think it might have been Big Eb or Tom, one of you guys sent me something and said, maybe even in chat, I lose track of all because I'm in so many different rooms, said, you know, what I would love to see is a real-time position before there's any voting by politicians. That there'd be literally an electronic database, and you could log in and see, oh, well, Pelosi's doing this, and Biden has this position. So you could see what all the different politicians were long or short on. And personally, let me ask you guys this. Should it be legal, in your opinion, for any elected official, and type it in the chat, to short the market? Should it be legal for anybody who's an elected official, from the president on the way down to anybody who's a government employee, should it be legal for them to short the market in any way, whether that's buying puts, whether that's going into inverse ETFs, whether that's, you know, just selling futures contracts short? Should it be legal for them to do that? What do you guys think? VIX went to like 80-something in March 2020, but within 3 weeks, yeah, I know. It was a real quick spike. VIX, I really don't use VIX much for that. Big F says, hell no. Thomasina says no. Well, they can. And to me, that's like the ultimate. Boss Poopa, I'd love to know why. Tell me why, boss. Why should it be legal for politicians? And again, it's not going to be a hostile debate. I'm just kind of curious why you think. Should it be legal for any elected official to be allowed to invest directly? I think you're more in line with what I'm thinking is, if you're an elected official, you should have no financial. You can have a blind trust, but you have no contact with that person. You simply deposit money and they manage it for you. You can't even dictate what you want to do. But you think about it, one of the areas of contentiousness I would encounter with people was, Merlin, you're shorting the market. I'm going to go, yeah, I make more money when I short. You're anti-patriotic. And I look at it as, I'm not voting on any issue that has to do with the benefit of America. But if you're an elected official and you are actually out there voting, saying, hey, I think that this market, this segment, this economy is going down, then you're not doing your job, because you should be putting bills and initiatives in place to make this market go up. That's your job, is to make America great. And no, that's not just Trump's slogan. That's just a phrase to say we should make this the best country it can be. So if you tell me that you can short, that's saying that they're betting it's going to go down. And if I knew that, let's say Cruz out of Texas is shorting the market, right? If I know that he's shorting the market, then what incentive does he have to okay or vote for anything that's going to do good for America? He won't, because he's short, self-interested. So for me, that's if they can't, then they make it so they can't. Yeah, that's true. I mean, those guys, it's ridiculous. It's like the inmates running the prison with regards to rules for politicians. But oh, well, good, we got the chat rate up on this one. They can, but shouldn't be able to. Correct. No, they make policy that affects price of stocks. And it's, to me, Eric, it's not just the price of stocks. It's it's the benefit. So the stock market for the average person, remember, a lot of Americans, I don't know if it's the majority, but a lot of people don't have a direct investment in the stock market, right? The wealthy do, because that's where the money is. But if you're an average American who doesn't have money in the market, their voting should benefit you through getting jobs and making it a better environment for you in this country. So yeah, I think that it should absolutely be illegal for any of them to do it. But until it's illegal, I don't have an issue with it. Yeah. Well, it's funny, Jay, because Nancy just got caught. I'm willing to bet you any amount of money that anybody here would like to bet me that this is a bipartisan issue, right? They are both out there with heavy investment portfolios. I mean, if you're head of the Senate Banking Committee and you're a Republican, you have financial stocks, right? You're probably getting some free stocks by E-Trade and Morgan Stanley and whoever's swaying your vote as a lobbyist. Oh yeah, we'll give you some extra perks. It should not be illegal in my mind, anyway. And also insider trading, right? There was a case many years ago. I actually think it was Pelosi. Pelosi's husband was given some privileges to buy Visa before the IPO, when it was right as Nancy was voting for credit card reform. And I guess Nancy was the deciding vote on that panel. Credit card reform, I think, should be there. You guys think it's right to pay 29% interest on a credit card? Hey, look, you get to 10 or 15, fine, I get it. But 29? That's just taking advantage of people. It's usurious. So there should be credit card reform, and different things should be put in place to help the average American. But Pelosi had that deciding vote, and if she voted for credit card reform, that investment from her husband would have done poorly. Of course, she voted against credit card reform, and Visa has done incredibly well ever since. Let's see. Politicians shouldn't be able to trade, period. I'm with you, Gilbert. I think so. I think if they do, it should be in blind trust. Molly, hi. Yeah, it's Republicans, Democrats, but again, we could throw in libertarians and Green Party, right? You're in a position of power. Corruption is just so close and right around the corner. Maybe they all insider trade. Strange, they make $200,000, but are all multimillionaires. Yeah. And, the other part is, and I wish that there was something that we could do about this, is once they retire from office, you and I are paying their health care and $200,000 a year until the day they die. That's what they get. It's like, wow, I should just be a politician because I could do one term, quit, and get paid for the rest of my life, and health care and salary. Hey, Don, I sent an email to you. I don't know if you got that one. Anyway, I could go on a rant. It's one of those things that just frustrates you in the holiday season. As you know, we're all grinding, trying to get ahead, and you guys got these politicians who are just milking it and swaying things. All right, here is a long-winded one, so I'll answer this one the best I can, and I'm sure Tom and others who are more option people will have a better answer for me, but I thought I'd get to this one because Jeff sent in a whole bunch of questions. So it says, I sold several puts this past month. I'm trying to figure out which way I would have profited more. Number one, selling puts, making premium, and then being put the stock. So there's a couple different considerations here. So if you're selling options, you have to look at or selling puts in this case, you have to look at that premium and say, is that enough for me? Could you short a stock and make more money than selling a put? Yeah, most likely, yes. I'll give you an example. If you look at this price chart right here, let's go back to IWM, which I sold today, and it was the 187. So let me make this an exact number because it's kind of sliding off the screen here. Let's go to coordinates, make that 187. So those 187 puts, and that was about a 1.2 or 1.3% gain on IWM. I think I made more on the XLE. So if this was to sell off, and I sold those when it was right about here, it's right on the tail. If I sell those puts, I'm going to collect 1%, right? 1.3%, and that's for 32 days. But if you decided just to go out and outright short IWM, you would have made 11.42%. So yes, you would make more money if you just went directionally. What I'm hoping with the options that I'm trading is, I don't want to be executed. But if I do, I'm okay buying IWM at 187. So pay me that 1.3% for that over that period of time. It's not that you can make more money. That's not the big consideration, right? There's trade-off. There's risk and there's reward. So yes, you can make more money if you just were to short outright or buy directional puts. Of course, you'll probably pay a higher premium since those puts have been falling, and since prices have been falling. Therefore, implied volatility is going to be surging. For me, it's like I know I could make more money if I just shorted the market. But if I shorted the market and it keeps going up, well, I'm going to be losing. If I shorted the market by really selling puts, and that market continues to go up, I'm not losing, I'm actually gaining. And I'm gaining really the only way that really would hurt me dramatically with these selling of puts is if it fell dramatically and went past my strike price. It went by a lot, right? Like on silver, I was executed by, I think it was like 10 cents past my entry price or my strike price, and I was executed fine, I'll take it. Yeah, exactly, Don. And I think it's the extent to which we want to get paid. Like, how much money do you want for your limit order? My target, at least from the strategy in this one account that I'm doing it in, is I'm looking for 1% or more per month. It's just not being greedy at all. And I've been executed in the past year and a half probably twice, right? Silver, and I got some IWM as well a couple months back. But mostly these things are all expiring worthless, right? So I sold how many IWMs I sold today? I sold 2 IWMs and I sold 10 XLEs today, and I'll probably sell some more if it continues to fall. But, for Jeff, it's not I can make more money. It's which one is going to fit my risk reward profile better. So number one, selling puts, making premiums, and being put to stock. Well, putting the stock is the worst possible outcome of that situation. Most of the time, I'm selling puts and collecting premiums, and are expiring worthless. Every now and again, I get executed. Now, here's, I think, let me read through this just so I can make sure I get it all. He says, or just buying these stocks and selling at my stops and targets. That one, the difference between number one and number two here, Jeff, is if you just buy the stocks or short the stocks, whatever, your capital outlay is significantly higher, right? I can go in there and I can control, in this case, what are we on, IWM? Bring up the chart for you. I can control IWM, and that's only going to cost me, a few $1,000s. So I think in this case, IWM, I forgot the exact strike price, but it was 187. That is, if you were to try to buy it at 187, that's going to 100 shares. That's $18,000. But if you go directionally, not selling in this case, but if you go directionally, I can buy those options, controlling that same 100 shares for a fraction of that, right? So there's much more flexibility in here with regards to capital outlay. I can buy a lot more or sell a lot more, thus increasing my rate of return. It's kind of like you're using leverage in this situation. Now, the last one is, I might have to save that third question. So let me go real quick into a little bit of I guess the situation here was sometimes he buys something or he sells a put on a security. It ends up exercising. He gets put that stock, and now it's in a losing position. And it's like, well, what do you do with it? The simple answer for me is you sell covered calls. So let me look at this example here. Of course, selling calls is bearish, and selling puts is bearish, or selling puts is bullish. Yes, selling puts is bullish. I mean, it's like I'm bearish to a point, right? I'm bearish. I think it'll go down to here, which is why normally when I'm picking these levels, I'm trying to pick them out of supply or demand zone. Now, I'm using as a benchmark for me 1%. So if I look down at 1% down on an option, so let's say I'm on SPY, I look down and I see, okay, here's where the strike price is going to pay me 1%, and I can move it up a little bit, and all of a sudden there's a strong demand zone just higher. Well, maybe I'll make 1.4 or 1.5 or 2 or maybe even higher percentage using that supply and demand zone, but still striving for 1%. So here's some examples that Jeff gives, which I think are really good. He says, some stock I am now the owner of, not as fond as I was at a higher price. ARCX. So let me just type that over here, and I'll bring you guys the ARCX in just a second. Okay. Oh, yes, the space exploration. Very volatile and speculative. I love this stock and idea, but now I own at $18.59 with the stock that you paid $20 for. So I'll leave it there before we start analyzing more. If you were exercised at 20, so you obviously sold some puts, that was your strike price, and you can see this thing on the dailies had a pretty quick slide, although the scale here doesn't really do it justice. It looks like a tremendous amount that it's fallen. Well, 14% in the last month, I guess that's pretty bad. Okay, fine, it's a bad sell-off. So if I was in your situation here, I would be going out and I would say, all right, so your strike price was 20, right? There's your strike price. Now, I don't know how much premium you collected, but let's just say you're not in at 20. You collected some premium, and now you're in at, let's say, I don't know. Let's say you collected 40 cents of the premium. I'm making this up. That means your strike price, your average, is $19.61. So right now you're underwater by $1.30. This is all loss at this point. What I would be doing is saying, all right, I'm going to go and see where I would sell calls against my position. So let's say you had 100 shares of ARKX, I could sell one call. The question is, well, where am I going to sell that call? Well, two choices. Number one, you could sell it really close to price, which would give you more premium, or you could sell it higher up at a price that you'd like to get out at. So what if you sold the 1960 call? It's probably not going to be 1960, probably 1950, given the way it's tracked. Thanks, Tom. ARKX, space exploration is so 1960s. That's one way you could do, Jeff, to generate extra income. You could sell monthlies that are, let's say, at 1961, or maybe you start selling weeklies that are like 10% above your current price. Well, that might allow you to collect more premium and gain back some of the losses. And as this is moving up, unless it surges quickly, you'll be kind of lowering your cost basis every week or every month that you decide to sell those options. That's what I would do in that situation, and that's what I did with IWM. I don't remember when it was. It felt like a couple months ago, but it could have been a year ago. I don't remember. You guys probably remember because I told you about it. I got exercise on IWM, and I just sold covered calls, and I went to where I was making 1%. So even though IWM at that point was dropping, I just kept selling 1%, and I did it for 2 months. IWM rallied up, took me out, and I made a profit on it. But I'm trying to always get a little bit more profit along the way by selling options against a position I have. And if I get rid of that IWM, great. I didn't want it in the first place. I mean, I wasn't dying to have it. I was okay with it, but that's it. Let's see. Alan, what did Alan say? Oh, you guys, politics and... All right, I won't go there. So, Jeff, I hope that helps. There's another example that you put in here as well, which is from... he says, if it gets to 18.15 to sell because it will be making a new low and buy back at a better price. Well, if you look at what's going on with ARKX, you said 18.50 make a new low. The problem is with new companies like this, where this isn't a company, this is an ETF, but you don't have the benefit of time. So there are no demand levels here, right? There's nothing for me to look and see a demand zone. That makes it very tough. So either you just say, I've had enough, and you sell it, or, and I think with ARKX, Kathy Wood, if I had to put my money betting on her or against her, I'd be betting on her. She's got a great track record, so I'm pretty sure at some point this will turn around. I know that's very subjective because my thinking shouldn't have anything to do with it, but you would logically think this will start to pick up and turn around. If you say that 18.15 is your stop and you've had it and you want to move on, that's okay, right? That's okay. The other thing you can do is you could be selling those covered calls against it, and every week or month lowering this cost basis so that if it finally does rally, maybe your cost basis gets down to $19 and it has a big surge and you do okay. Wouldn't you want to get out ASAP for this reason? What if you sell the covered calls but it never rallies and continues to go down? Yep, exactly. And again, Walter, that's a great point. In this case, you're okay because it's an ETF, and I say that loosely. Okay, meaning you don't have single stock risk of going bankrupt and going to zero. But you're right, Walter. At a certain point, do you pull the trigger and say, "All right, I'm out"? Because could this go down to $10 or $5? Yeah, it could. But that's assuming this entire market segment of ARKX space exploration just keeps cratering. I think that we'll see more demand. And this is just a thought. What do you guys think? Do you think we're going to get more interest in space going forward? You think we're going to get more space exploration? Are we going to finally get back on that horse and start getting back into space and Elon Musk get us to Mars in the next 5 years or so? I think so. And I think if that happens, you'll see more private sectors do well, and this should be a good performing ETF. It's just not right now. It's like we talk about MJ all the time. I think MJ is going to be a great performing sector sometime. Whatever reason, it ain't now. Right? This one was soaring back at $36, and now it's just been drifting down. This entire year has just been a bloodbath for MJ. Right? It's been a horrible 2021, and that may continue on for space. So I think in the similar picture, as Walter says, if your feeling is this is going to keep on going down, then dump it. Right? Dump it and just be a little bit more careful with those. You're gonna go to Mars to start the first options market? Do it. I'd love to be buying options from you from Mars, Don. Do it. I think, Walter, that's kind of cool too. Deep sea exploration, considering that 2/3 of the Earth's surface is underwater and we don't know squat about it. We're still finding giant squid, and they're like, oh, it's like an alien. Yeah, they are alien. What else do I got? I am on. So JM says RDW and RCAT. That was these. Redwire Corporation. Ouch. Is this a SPAC? This looks like a SPAC. Remember, we had that SPACs are always like right around $10, $10, $10, and then they get the news, boom, they spike, and now RDW not looking so good. And RCAT, I think these are SPACs, not RCAT, Red Cat Holdings, but these are the same situation. When you look at this chart here, Jay, it's just going down and down and down and down. I mean, again, the trend is your friend to the bend at the end. We had Don Fran here today, and you know, when he was in Tesla was on a strong uptrend. Almost, in my opinion, it was too strong. But why was he in it? Because the trend was strong. Of course, he loves Tesla, right? I was speaking for you, Don, but I know you love Tesla. But you know, one of the main factors here is trend. And if you're long on RCAT or that other one you had there, RDW, you're going against the trend, my brother. All right, this is like you're trying to be Gandalf right in front of that big old flaming demon with the horns and the fire whip, going, "You shall not pass." Yeah, I don't know. A little dangerous. All right, let me go into how much time I got. Oh my goodness, time just flies when you have fun in the show. Okay, let me just do this one real quick because I want to make sure. Jeff, you sent in like 10 questions today, so I appreciate all the questions. This has been the Jeff show. Yep, more green candles than red. Trend is your friend, man. And if it's more red candles than green, then go short. Done. Here's the last one, and then we'll wrap it up. Jeff says, I've been seeing a lot of videos about trading the tape. Do you have to pay for that data? Is it worth it? Can you tell how many orders there are in the matrix? Okay, yeah, there you go. Balrog. Thanks, Boss Poopa. That was what it was. I couldn't remember that guy's name. I love that line. You shall not pass. So, with this one's near and dear to my heart because if you go back to how I cut my teeth trading back in the late 90s, it was all about short-term, high-speed day trading, and it was all about looking at order book, level 2 screen, and order flow. Now, you have to understand that back in 97, 98, 99, 2000, you could look at a level 2 screen, and you could see Goldman Sachs. His MPID, which is Market Participant Identification Number, was GSCO. So anytime I saw GSCO on the bid buying, where do you think price is going to go? It's the old phrase that says, or old adage, if you see an elephant walking through the jungle, where do you want to be? Right behind him. So Goldman, way more capital than I'll ever have. So obviously I see Goldman buying, I would just jump on there and buy. That's when the retail population just got access to these tools that institutions had been using for years. So after about 2 years of that, Goldman and Merrill Lynch and JP Morgan and all these other firms were like, wait a minute, everybody can see what we're doing? How do we hide this? And they started playing games. And then they started using iceberg and reserve orders. And this is like into 2001. From 2001, once we went from fractions to decimals, the utility of the order book dropped significantly. Now, is it good to see kind of where maybe buyers or sellers are lining up? Yes. Should you pay for that data? I don't think so. And again, I'm one that used level 2 and that type of data more than probably anybody you've ever met. There is a guy who I wish I could mention his name, but I'm sure slander might come into it because I would give him the absolute Donkey of the Day award because this idiot is selling courses, telling people that by looking at a level 2 screen, I can tell you exactly what Goldman Sachs is doing. There's no way in hell he can do that. They're using reserve orders, they're using ECNs, they're using all sorts of electronic networks to bluff what they're doing. If I'm an influencer trying to sway a market or buy 500 million shares of something, I cannot let you know what I'm buying because you will totally jump in front of me and use my order flow. So this is a game that's been going on. So to your question, Jeff, do I have to pay for that data? Yes, you usually have to pay for level 2 data. Is it worth it? Absolutely not. Don't waste your money. Can you tell how many orders there are in the matrix? Yes, you can tell how many orders there are, but you can't tell how many shares there are. So I can tell you by looking at level 2, oh, there's 16 people lined up to buy at this price. But what if every one of those 16 people was only buying 100 shares? Okay, I know there's a minimum 1,600 shares there, right? 16 times 100 would be 1,600. But what if one of those guys had a reserve order, an iceberg order that is hidden, and that is for 50 million shares of that stock? Visually, you look at it and you say, wow, 1,600, I can take that whole block of buyers out and the price will start to fall. But in reality, it'll never fall because one of those guys is using reserve orders, and you'll never know unless you watch the time in sales. Now, you can get a feel for, not necessarily is it Goldman or JP Morgan, but you can get a sense as to somebody is propping up this market by their actions, right? That's the gist of it. So that's all I have to tell you on that one. Don't fall for it, guys. Do not spend money for this guy's courses that's out of New York. You should absolutely stay away from it. If somebody tells you they can tell you exactly what market makers are doing, BS. Just tell them to go away and leave you alone. You know, it's like me saying, Can I look at this price chart here? And I'm going to go to a normal one. I'll go to like the Russell. Can I look at this price chart? How about, let's go something else. Let's go to crypto. How about Matic, right? Can I look at this price chart and tell you exactly where things are going to turn and tell you who's exactly buying at every level? If I told you that, I'd hope you guys would unsubscribe from me and slam me with hate mail because I'd be lying. Absolutely lying. There's no way I can tell you with 100% certainty where this thing's going to turn. Now, are there points where the probability gets higher? Sure. But I don't know who's doing it. All right. When you see big sharp moves, you know, that's part of supply and demand methodology. It's really about understanding that there's probably big money behind it. I say the word probably because there's no guarantee. But anyway, no, stay away from it. Your matrix level 2 order books, they're useful for you to see where you can sell your shares right now. But as far as using that to gauge where those turning points are going to happen, not really. Yep. So someone else is selling level 3, yes. And again, that would go to the individual who's out of New York, and I call him the donkey of the day because he is a donkey. I've met him many times, and he is a donkey. Very full of himself. Anyway, level 3. So you have level 1, which is your NBBO, right? That's the quoted price you get on any trading platform in the world. Level 2 is where you dig a little bit deeper, and you can now see the order book lineup. Level 3, in theory, is called NASDAQ Workstation. That's what the term was. That's what we deemed to be level 3. And level 3, not mentioning any names, GD. Level 3 is technically an institutional order book where you can see at every price level all the different aggregations. So you're supposed to have a different level of transparency. NASDAQ called it total view. That was what they were selling to the public. But again, once you realize that whole display could be fraudulent, why would you want to use it? It's just not worth it. All they do is wash trades anyway. Yeah, well, that's definitely part of it. Let's see. Owen says, what do you think about electric car companies, Ford, Tesla, and the new companies? I'm a fan. I think that it will be a huge booming industry, but I think let's not just narrow our focus down to just the car companies. I think if you're thinking along that lines, then you have to take a step back and think of where might opportunity come from. Because a lot of people are looking at Rivian, they're looking at Lucid and going, oh, they're going to be the next Tesla. And might they be? I don't know. I think Tesla has a huge head start on anybody in that space right now. Now, granted, some competition will probably come in, but I would not be betting against Tesla at this point as being the dominant leader. Do I like it? Yes, I love it. But again, let's not think about Rivian. Let's think of who is providing them with all their batteries, right? Because every car company can make a car, but if you don't have the power plants, which is the batteries, nothing runs. So now you can kind of go to deeper levels into, BHP. BHP is you put BLDP, but BHP and lithium mines and all these different rare earth minerals that are needed for battery production. Now there's some plays there as well. I am definitely bullish on EVs. I think it's the future, especially after I got my electric bikes. Oh man, I am in love with my electric bikes. I just don't ride it along. Right up much. GD, I'm just glad you didn't say something like, this guy Merlin's a total jackass. Would have made my day, though, if he did. Thanks. China, yes. China has a whole bunch. And again, we did a show on some of the infrastructure plays, right? And a lot of that was minerals and mining companies. But if you dig deeper, you'll see here's nickel companies and here's lithium. I mean, these are all critical elements in that space. So I think it's big. I think we're going to be a huge industry. They saw that level of data to help JP Morgan spoofing. Yeah, right. And it's funny, OG, it's exactly right. At the beginning, when they didn't know everybody was watching, they did honest. So if I saw Goldman Sachs throw out like 200,000 shares to buy, dude, I'm buying because I knew it was real. Now it's the opposite. You never trust anything that's on a level 2 screen. Would you fly in a battery-powered jet? Not me. It's coming, right? At the battery conference that Elon Musk did a couple years ago, actually last year, he had that, right? He was talking about the energy needed to create a jet-powered airplane. How crazy would that, or a battery-powered airplane? How crazy would that be? And you're kind of right, Mark. I would probably have apprehensions, but what I want to see, if that happens, is the entire top of the fuselage from head to toe pops up, and you have, parachutes or something. But I'd fly in it, sure. Yeah, I know, Naomi. And I was looking. I'm not a big Ford fan, but when that Lightning came out, that commercial got me. I saw it. I actually saw a Rivian right down the street from my house yesterday. Not a bad looking, kind of small, right? It's kind of like a Tacoma. It looks good, but for the price, I'll wait. All right, let me go into what we have cooking for tomorrow, just so I could. I would fly in a. Let's see. Yeah, let's go here. Go full screen. So here's the last part. We'll wrap this up. Economic calendar for tomorrow shows us only 3 announcements. Sorry, this is earnings calendar, not economic. I don't know why I have that on here. Maybe I did them backwards. This is earnings. You have General Mills. You have BlackBerry, because I know so many of you are big into the BlackBerry, and Rite Aid reporting earnings. And Rite Aid, obviously, rather small market capitalization. Really, General Mills, that'll give us an idea as to food prices. I think we'll get, especially after their shareholder meeting, when they talk about what's impacting their business, you got to believe that General Mills is really getting impacted by commodity prices. I mean, we talked about that the other day, where you look at things like corn and wheat and soybeans. I mean, here's your corn chart. Oops, there's another donkey of the day. We did 3 of them. There you go. This corn rising from 500, so you're up. Let's see, you're up 20% in the past month, and you look longer term, this is obviously going to impact General Mills. Now, we know that they're involved with futures and different products to help hedge that a little bit, but that's who's reporting earnings on tomorrow. That's going to be before market opens. And then here's your calendar for tomorrow. The big stuff really happens Wednesday and Thursday, but you can see here for the Canadians on NABUS to the north, they have their retail sales numbers coming out. They're expecting it to be rosy. All things looking pretty good from the retail sales numbers. But if you look at the USD CAD, well, it hasn't been that rosy because the dollar's been so damn strong. I mean, today, again, testing that 129.5 mark, which to me, once we get a close above that, you're going to see a real quick jump up here to 131 and change. So the dollar really powering against the Australian dollar, I'm messing up today, the Canadian dollar. And if their retail sales numbers disappoint, that might surge even more. So keep your eye on that one. And then you have GBP with their GDP numbers tomorrow. That's going to be late at night after this show. Well, I guess Don says, why would anyone be scared of battery over fuel? I'd be scared of them all. I think it's just a technology piece yet. You could have a battery short and all of a sudden, I don't know. As long as you have a way to land the plane, I'm okay. I think you have an engine. I think Southwest did a great job in that one flight where the engine blew and killed that lady on the airplane, which was just absolutely horrible. If you haven't seen it, there's a good 2020 episode on that. Pretty traumatic. But the engine blew, and basically they were down to one engine on a jet. Well, they landed that thing without any real damage other than what happened because of the engine explosion. So, I don't know. I'm still skeptical on the technology. It's because it hasn't been proven from an air transport perspective. But as long as they can glide that plane in or have some parachute that pops up, let's go. I'm doing it. I agree, Don. I'm bullish on that dollar. And I'll tell you, the stronger that dollar gets, folks, the weaker our equity markets are going to get. And we could see some real mayhem, which is just opportunity for us. All right, that's going to do it for me. It is past my time, and I got a bunch of stuff to get ready for. By the way, for those of you who are in XLT, for Online Trading Academy, I'm doing a general session tomorrow I think it's for all XLT on cryptocurrency. I have my Crypto Investor Live tomorrow night, and then on Wednesday, I'm also doing a CIL because we will not be working on Thursday or Friday. All right, that says, everybody, have a fantastic remainder of your day. I will see you guys all on tomorrow's show. Maybe have a guest, maybe not, but either way, I will see you guys all on tomorrow's show. Take care.